You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPKEX volatility products. SPKEX options and futures are traded on the SPKEX Volatility Index, SPKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPKEX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear, keep rating and reviewing it wherever you get this content. It's available on just about every platform under the sun. As we could see, there are new people discovering the world of options, and as a result, the world of volatility pretty much every week. So if you want to help those folks discover the show, learn what they're doing so they don't hopefully blow out in these crazy mad markets we're all living through, then leave a review on your platform of choice. Really does help the new folks discover the content. Of course, this is also our final program for the on-demand side here on the network. If you don't want your broadcast week to end, you want more content in your lives. In fact, you're spoiled rotten this week because you've got two more shows coming at you after Volatility Views today. Two exclusive shows. Man, is my throat going to be tired by the end of the day, listeners? You've got Options Oddities coming up after Vol Views. And then, of course, after that, we've got another Pro Q&A, double Pro Q&A week for you. Man, we like you folks. Where do you go to get access to all of that stuff? theoptionsinsider.com/pro. Or for all you super cool kids who need your own little secret entrance, /secret club. Remember, you didn't hear that from me. That's just whispers in the wind. All right, let's see who's joining us to break down the mad, nigh on historic week that we've got out there. First off, joining us from the northeastern volatility mecca known as Maine. The dark and stormy shores are back. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. Have you recovered, I should say, from A, the volatility this week, and B, your massive clam palooza from the clam piracy, your clam bounty, sir?
I forgot about that. I did send you that picture of the cooler full of clams. I did recover, but I ate way too many. Sadly, the clammers are not active today because we have a whipper of a nor'easter throwing rain and wind our way, blowing all the lovely leaves off the trees. Sad, sad, sad. Fall is leaving very, very quickly today.
See? The dark and stormy shores. I say it every week, and it is literally true this week. And how long have I been telling you to collect your toll, your bounty from these clam pirates? I'm glad to see you finally are listening to me, sir. Take your toll if they're coming in and robbing you of your clams, sir. Take your 1/3. It's medieval law there on the shores of Maine.
It does feel like that sometimes, I have to say. But it was actually my wife that went out there with a glass of milk and some brownies and scored big time. So I would like to say that I was out there being rough and tumble and wrestling the clams out of the guy's hand, but it was a brief moment of kindness from my wife that brought the clams to us.
You guys pull the old good cop, bad cop. She went out with the brownies. You had the shotgun behind her. And
exactly.
it all worked out.
Very effective.
It all worked out at the end of the day. And over there in the MIAX hot seat, shaking his head saying, what the hell show did I get on today, is none other than Mr. Matt McFarland, the derivatives products and business development specialist over there at MIAX. Matt, welcome back to the show, sir. You picked a good one this week.
Hey, Mark. Yeah, good to be back on the show. And it seems like I did pick a good one, but it seems like it's pretty easy to pick a good one these days. Every day in this market is very, very interesting.
It is kind of an embarrassment of riches when it comes to volatility. Not exactly the best thing for society as a whole, perhaps, but a good thing if you're doing a show about volatility. So let's get to it.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was, and indeed still is, from a tumultuous volatility perspective. And man, do we have some tumult, and man, do we have some vol this week. Just today alone, of course, we are seeing yet again some more of this reversal action, which apparently is all the rage with the kiddos these days. Today, we saw the markets rally, S&P rally up north of 3,700 for a brief period before they came for it yet again, cut the legs out from under it. Now, S&P closing in on down 2%, flirting with that 3,600 exactly pretty much level right now. Probably going to break through it again anytime now. And so we're off about almost 70-odd handles on the day. So closing on a 2% dark side for the S&P now. The NASDAQ off about 2.33%, Dow off a paltry 1%. Right now, of course, we're coming off the heels of just a completely insane day yesterday. It was CPI day, listeners, and they call economics the dismal science for a reason, because these numbers can be viewed many different ways, and that's pretty much what we saw yesterday. You know, some people chose to focus on the fact that maybe the CPI wasn't as high. Everyone was dreading that 8.3 number. We got 8.2. Everyone's saying maybe not as bad. Then you start looking at the core number, and it's at a 40-year record, and so it just was a tale of two markets yesterday. First, there we were just selling off, crushing it, high inflation. Here comes the Fed. Everyone's spooked to hell and high water. And then the bulls just came out and they had their horns ready for battle. It was aggressive, I think, to put it mildly, the turnaround we saw yesterday. We saw at the end of the day, pretty much the Dow had swung 1,300 points to the upside. The S&P had done somewhere in the neighborhood of 200 points. S&P had the widest trading range it has had intraday since the insane time of March 2020. And we all know how insane that was. It was the fifth largest intraday reversal for SPKX ever, and the fourth largest for NASDAQ. So everything just turned around aggressively. And it seemed like today we were going to continue that rally for at least a little bit, until the bears, after getting whooped yesterday, came out today and said, you know what? Our claws are sharp. They are ready. And here we come, ready to play today. So it's that time, listeners. We are in full-on whipsaw mode out there in the market. These are not markets for beginners. So if you're a little shocked by this, maybe you want to sit on the sidelines for a bit. Maybe you're new to the world of vol, the world of options. I don't think anyone would blame you. We've had a lot of guests coming through our Pro Q&A hot seat recently, extolling the merits of cash and the optionality, pun intended, of cash. And in a market like this, if you're a little bit spooked, there certainly is some value to that. Hey, you're missing out on a 2% down day today, right? That means coming into the start of the show, we had spikes. It's funny, for all this whipsaw, how long have we been talking about, do we need a massive vol spike, pun intended, to really signal the bottom of the market? We've seen huge moves in the market. Vol hasn't really kept pace. Coming into today's show, all this movement, all this drama yesterday, and all this movement today, spikes is at a 32.25 when we kicked off the show. It's up not even a full point, 0.8 of a point. VIX was actually at the same level, 32.25 as well. Very rare that they're hanging out at the exact same level, but they were. That was only up about 1/3 of a point. And VVIX, the vol of vol, up about 1 point. All that from where we were this time last Friday. So we've done a lot of living between now and last Friday. And the vol products, looks like they could barely shrug a shoulder. Our old friend, the Viking, a.k.a. VSPKEX, a little bit frothier than this time last week. It's at a 127 right now, up 10 points from where it was this time last week. Again, the range for that one is about an 89.5 on the downside, which came late July this year. And the high we've seen for VSPKEX in its short history so far is almost 206. And that was set on December 3rd of last year. So we're still at the lower end of that range. There's a lot higher that the VSPKEX and the Viking can go. All right, that's a lot of living we've done. Let's go back to the MIAX hot seat now to start things off. Matt, like we said, you picked a good one this week. We're coming on the heels of some historic action in the market. Looks like we're getting similar action, not quite as aggressive, but still pretty aggressive reversals out there today. What has been lighting up your tape this week, sir?
Yeah, Mark, yesterday was, like you say, an incredible, crazy day. We took out the June lows. On the back of that bearish CPI number, SPY got down to 348. And like you say, the reaction of the equity implied vol markets as measured by either spikes or VIX was relatively muted. That's really been the theme throughout the entire year, is where we've got this kind of slow grind lower in the market, but relatively muted reaction of equity implied volatility. Now, that certainly is the case in equity implied vol, but if you look at other measures of implied volatility, specifically rate volatility, that's not the case. The rate volatility is telling a much different story than equity implied volatility. So when I look at rate volatility, I look at yield vol. That's its ticker YLDVOL, and that's a indication of rate volatility put out by our MIAX's index partner T3 Index. So that measure is around 166 right now. It started the year around low 80s. Back in March 2020, the ultimate panic period of the most recent times, the yield vol index was around 164, 165. So yield vol today is higher than it was in March 2020. So the rate volatility market is communicating absolute panic, whereas the equity implied vol market is communicating relative calm. So the fact that we haven't seen higher equity implied vols doesn't mean that it's not going to happen. If you look back to 2008, you had the subprime lending crisis, and that was known throughout the entire year, but you really didn't get capitulation in the equity implied vol markets until late in the year, until the Lehman bankruptcy. So the possibility for capitulation in the equity implied vol markets remains, and it certainly feels like a very, very risky market. But I do want to touch upon, the T3 Index, our partner. They measure volatility a little bit differently, specifically as it pertains to S&P 500 volatility for spikes. I don't want to go into the nuances of how they measure it differently, but the methodology on which they approach it can manifest significant differences in spikes versus VIX at crucial times in the market. A most recent example was the FOMC announcement on September 21st. So the spikes and VIX were plodding along at 27-ish coming into the FOMC announcement at 2 p.m. The FOMC announcement came out. Fed raised rates by 75 basis points. VIX went up to 30. Spikes went up to 28. Usually you don't see that much of a divergence. VIX stayed up there for about 5 minutes, and then it came back down and joined spikes at the 28 level, and then it continued to track each other well for the remainder of the day. But it's at crucial moments like that where I contend that spikes is disseminating a more accurate and a more reliable level of what 30-day equity implied vol is. So I think it's important for folks that are monitoring the volatility markets to be aware of those differences. But since September 21st, that FOMC day, the market's been in backwardation, essentially indicating that there's the market's concerned about higher volatility in the near term than the short term. So it'll be interesting to see how things play out over the next coming days and weeks.
That it certainly will. Mr. Rock Lobster, same question for you, sir. You're coming in hot off the heels of a nigh on historic day. I didn't even mention, as Matt mentioned there, that we broke through the lows earlier this year. There's so much happened yesterday that kind of got washed away in all the madness out there. But a crazy day yesterday, so I'm sure you have some thoughts on that. And then what is lighting up your tape today, sir?
Or I just have trouble with devices. Let's see here. I think the biggest thing is, I don't know. I've been kind of fooled by this latest wave in vol, I have to be quite honest, because I thought, then that's what happens when you start thinking. But that these numbers would come out and then vol would go down because the path is clear. Like in my head, interest rates are going up. The Fed has said that's what they're going to do. The Fed needs to maintain credibility because just look what happens to the English, right? Now, all of a sudden, what you're not hearing, and I think this is the biggest problem why equity markets are what I would just say rudderless right now, is you're not really hearing anything from the White House about, we see this inflation thing, but we're gonna maybe try to stop spending money for a while. Something, you could see what happened when the Brits just said, hey, we're gonna maybe throw caution in the wind and cut taxes and do some supply side stuff, which I think normally would be a good idea. The problem right now is I don't think that's the problem is on the spending side. So governments have to spend less money. And, we've had four spending bills in 3 years totaling $3 trillion of money that the U.S. government doesn't have and has to borrow. So where we are, all of these things are exacerbated. The COVID, supply, everything just kind of, we're not really doing anything, I would say, to make things better from a U.S. gov point of view. And the market's not dumb. They're like, oh, okay, so our only solution then is the Fed has to ride this, hard ride of raising rates to try to bring some discipline, because we're not hearing it yet. Like, I would call the bottom of stocks when you heard Uncle Sam say, you know what, we're going to freeze spending because inflation is out of control. Just something, an inkling, anything that would sort of turn the boat around, because I feel we're kind of on this tanker and it's going, right? And it's going in one direction. And as you well know, things going in one direction, and when they don't stop going, very destabilizing for markets. The bond market is basically one direction we're getting out. We're like, how do you rip this, the dependence that, that these central bankers, through their omnipotence of low rates or too low rates for years, and this is prior to COVID, right? Years and years of all this Operation Twist, and then which Bernanke, I guess, got a Nobel Prize for screwing everything up for everybody. But I mean, this is very, I would say kind of difficult stuff here, because we're trying to get off of this, get out of this. And where do stocks go when we're trying to sort of change regimes, but you're not getting, let's just say, you're not getting a lot of help from Uncle Sam right now. The Fed is trying to do its thing because they don't want to be the ones to destroy the U.S. economy. At least I don't think Powell does. He would rather raise rates and slam into a recession than have out of control inflation. Because, inflation is really the only thing that has destabilized, countries in the past. Like the U.S., like we survived a depression, right, with high unemployment. Like countries really don't survive out of hand inflation, and that's what we're in right now. And it is definitely, it's fiscally driven. So we're in a tight spot because the boat is going in one direction, and as of right now, I don't see it going in the other direction. So, the equity markets, I think, will rally a little bit all the time on some kind of, some whim of hope that inflation's going down. But I don't really see it happen until rates get high enough that really tamp demand. And on the second thing is, we need energy costs to go down. And, right now, energy policy is to keep those prices kind of high, from what I can tell. So, unless these huge, literally, these are massive movements in one direction, causing inflation until they start going in the other direction. I think we're kind of going to be stuck like this for a while. I guess inflation, and then we got to wait until demand just starts to dry up for a lot of stuff. So anyway, that's kind of why I think why the market is doing what it is doing currently. And it's not showing any signs of giving it up. So how low do we go? I don't know. But we did make an all-time low. That 5% move was huge. It's funny because I'm teaching my kids about options, and I showed them an option that was worth a nickel. The 3,700 calls in SPX traded as low as a nickel and as high as $8 at one point before going out worthless yesterday.
There you go. Teach them just to swing for the fences on their first trade.
Well, I want to show them how things can move, and they're like, "Wow,
Daddy, what's a lottery ticket option?" Yes.
Okay, son, this is a lottery ticket option. So they were impressed that the market can move like that. So this is just in my my free ranging option education classes for my kids. So, but what I want to do is just show them how things can move, right? And that's where we are right now. Stock, we could go. Do I think the semiconductor industry looks cheap and I'm starting to scoop a little stock? Yes. Could it go lower? Probably. I don't know. But until, again, like I said, until something starts to move these tankers of just these huge trends that I think are very inflationary, until they stop going in that direction, I think we're stuck with this. And the fact that you had a huge number and volatility really is not going down, the market can't find any footing anywhere. Like, none of those are good things in my mind. So I think we'll keep getting those bear market rallies, but I'm the number I have in mind is the number we were prior to COVID, and that's what 3,300 SPX. I know Mark Seabass has been kind of like, that's sort of a lower number. It's kind of, hey, they're literally going to, the market tends to do stuff like that, right? We're going to erase all of the gains due to government spending over the last 2.5 years. And I think that's not an unreasonable spot. So from a vol point of view, it makes volatility strangely untradeable because you have VIX at 32, you still have pretty high realized vol in the SPX. So it's harder to trade the VIX instruments because, I can't even see us getting out of zone 4 anytime soon. I thought last week, the number would come out and people would, stop freaking out, but that's just not the case. So, what's going to cause the market to stop moving 1.5% to 2% a day? And like I said, there's nothing on the horizon that is going to, now that we are in this, clearly prices are still going up, even though I don't know, somehow Biden said they weren't going up as fast or whatever, but we still have month-on-month increases. So, I'm just saying here, until your grocery bill goes back to normal, we're stuck with what we got. But the fact that vol is up after a number on a Friday is never a good thing in my mind. A backwardated vol. It's bad for stocks.
Backwardation, you say. Let's get to it then. The land of the vol futures, the volatility surface, listeners. And as Matt mentioned, as the rockingest of lobsters mentioned right there as well, we are looking pretty juicy, looking pretty backward. Coming into the start of this segment, we just re-racked them right now just to make sure. And yeah, we're looking pretty firm. Weirdly enough, the ACH and NO future both up the exact same amount this week. Usually you see a little bit of evolution between the two, but nope, they're moving in lockstep today. Both up about 1.35 points on the week. And for the first time in a while, we're seeing pretty much the entirety of the VIX futures curve all the way out to at least June of next year, all above 30. This time last week, even June, I think, was at a 28.90 or something along those lines. So we are seeing evolution in the longer term portion of the curve out there where you can't find a future below 30, at least right now. So we're pricing in some juice for the near future here. Mr. Matt, you spend a lot of time looking at these things called SPKEX futures. What's catching your eye out there in the volatility surface this week, sir?
Yeah, Mark, few updates for you on the SPKEX futures front. One, we just completed our best quarter of the year. Third quarter average daily volume was about 5,200 contracts per day. That compares to second quarter at about 2,500. So we've more than doubled the average daily volume in the third quarter. Last week, we received some good news from the OCC. So the OCC has categorized SPKEX futures and options into what they call their product group 500, which is S&P 500 volatility indexes. So as part of that product group, SPKEX futures, SPKEX options, VIX futures, VIX options, all in the same risk bucket. So market makers, broker dealers will get a significant haircut, a reduction in margin requirements if they have offsetting positions. Now, this only applies to market makers and broker dealers, but the importance of this development for customers is that it has positive implications for SPKEX liquidity, because the market making liquidity providing community can be much more capital efficient and therefore deploy liquidity in a much more efficient manner. And lastly, on October 31st, the minimum tick increment for SPKEX futures is going to move from 5 cents to 1 cent. If you think about SPKEX futures and VIX futures, a 5 cent minimum tick increment is a $50 tick value. That's about the largest tick value there is in the futures industry. So that's been a point of frustration for a lot of end users that have to cross bid ask. That's a large bid ask to cross. We're reducing the minimum tick increment to 1 cent or a $10 tick value, giving opportunity for more price discovery, more precision with the placement of orders. So really looking forward to that happening on October 31st.
All right, big news out there on the SPKEX futures front. Everyone who's looking forward to more SPKEX futures volume, then accreting into tighter options markets, there you go. That is a step along the road. Mr. Rocklops, the same question for you, sir. We're seeing interesting evolution out there. The futures, VIX futures, extremely backward, as you pointed out. The entirety of the curve pretty much north of 30 right now. What is catching your eyes out there in the vol surface this week, sir?
I got control of my mute button. So there we got that going on for us.
There you go. So, after a decade and change, you finally mastered the flashing red button.
Yes, I try. Well, when we switch from phone to mic, it's a hard thing for me to do. So again, we have a slightly backward curve. My favorite position with that is just in the money call butterflies. The thing with backwardation is my rule for my students is kind of paraphrasing the great Warren Buffett. We could stay backward for a lot longer than you want to. So in 2022 certainly is like that. So put butterflies. The main thing about, I would say, backwardation, and that's when cash is higher and then all the futures behind it are lower, is that vol up here, VIX up here tends to move slower of all things, because what happens is the forward volatilities get lower as VIX gets higher, so the futures kind of mathematically they move slower up to that cash when they start if SPX volatility starts to increase. So flies are a good way to kind of ride that up. And the second part is, this is where puts in the VIX and spikes and everything go to die. Like when you're in backwardation, puts just do not do very well. And I prefer to wait till the curve flattens out a little bit before I start buying puts again. Just for that, if you're a put buyer, when you like, playing that sell the volatility game. And I think that's kind of where we are. So I would rather just, stick to kind of the in the money type of call fly VIX that still has a slight long delta. And then you see what happens, because it's not like the vol is going down tomorrow. As much as I thought we could have gotten to the mid 20s next week, I just don't see that happening at all. So from a term structure point of view, you have to take what you get. The fact that, volatilities are higher, VIX cash spikes, they're all going to be higher, right? That number will be higher in those futures. The forward vol drops in all of those because all the vols in the front get very high. And it just takes time, and it will take time for those futures to kind of gravitate upward. And that's what you get. So it's kind of a strange artifact that even though we're in a very volatile market, those things tend to move a little slower until we get a turnaround, and then when vol does go down, things will just tank very fast. But right now, that's what we have. So it's kind of like, if you want your upside in VIX, I think you have to be, or spikes, you got to be relatively patient with the type of trade you look for. And that's what we got right now. So here's what's funny, right? So if you're looking at the money straddle in those products is only around let's say it's called $7, right? So the November straddle isn't even pricing VIX breaking below 25 for the next month, which I see it. But that's what it is, right? Because I was laughing last time when they were pricing the 27 straddle was like $5 right before these CPI numbers came out last month. And like, wow, that looks pretty darn low. Like, we can't go down anymore. And sure enough, I mean, that straddle did go up in value, but it went up in value because VIX was up another $5 or $6 from that point. So again, right now, they're just taking the downside. Basically, let's just call it this way. There's not a bid for the downside in any of the major vol products right now because we're in backwardation, and in backwardation, vol puts go to die. I hate to sound so grim about it, but of course, that's my role here on the Option Insider Radio Network.
As a holder of a few vestigial puts in VIX land, yes. I can confirm that. Yes, I bought them before all this cool stuff happened. And alas, once you're backward, you're right. It is a wee bit too late to really to get the big. You're not going to get those nickel to $8 moves like how you taught your kids that options work. They go from a nickel to $8. That's how you do it.
Yes.
All options work that way. Dive in. The waters are fine. It's a great market to be in right now.
It's very easy.
Easy peasy. Let's get on out to the vol options right now. Let's start in Spikes land. And again, we have a mix this week. It's not entirely in the top 10 in Spikes options. It's not entirely extremely in the money options. There's still a lot of those, but there's a few others percolating in there now that, dare I say, it might be a little bit more reasonable. Let's see. Let's start at the bottom here. Number 10 in our Spikes top 10 here. We got the OC 170 puts, so we're still hanging out in that extreme range, listeners. Number 9, the OC 140 puts. Number 8, the October 70 puts. You know when you're playing with the 70 puts and they look somewhat reasonable by comparison, you know you got some extreme positions on out there. Then we go to number 7. We've got the OC 33 calls. So there you go. Somewhere relevant to where we're trading right now. And then right behind it, number 6, we have the October 32 half puts. Number 5, the October 24 calls. So not that crazy. Then we get a little bit more meaty. Number 4, we have the OC 21 calls. Then we go off a cliff again. Number 3, we've got the October 13 halves. Number 2, the OC 11s. And the number 1 size position in Spikes options this week, still the NOV 12 calls. Somebody really loves that 12 strike. And apparently they have no plans on dumping it, at least anytime soon. Mr. Matt, what is catching your eye out there in the land of Spikes options this week, sir?
Well, Spikes options have been relatively quiet from a volume perspective, but we have added a couple of market makers to Spikes options, and this has resulted in higher market quality in the options. We're seeing the average bid, the average size on the bid ask of Spikes options has increased from about 25 per side to about 100 per side now. So significant improvement in the market quality of Spikes options. And similarly to what I mentioned earlier on Spikes futures, where the minimum tick increment is going to change, it's also going to change on Spikes options. So currently the minimum tick increment for Spikes options is 5 cents when the option premium is below $3. That's going to go down to 1 cent October 31st. Currently, for option premiums above $3, minimum tick increment is 10 cents. That's going to go down to 5 cents. So giving the market opportunity for greater price discovery, giving customers opportunity to be more precise with their orders. That's happening on October 31st, so we're looking forward to that.
More options with our options. That's what we like to hear, listeners. Let's get on out now to the land of VIX options. And VIX putting up some numbers today, which you might expect given the aggressive whipsaw we're seeing out there, and on the heels of the even more aggressive whipsaw we saw yesterday. Let's start here. Today's paper, listeners. VIX, again, put up some numbers. 801,000 contracts on the tape. The ADV also surging in the right direction. It's up 61,000 contracts this week to 624,000 contracts a day. That's a pretty robust ADV for VIX. Remember, just about a month ago, not even, it was below 400,000. It was 390 something. So we have seen quite the comeback in VIX paper. Let's see what's hanging out in the top positions right now in VIX options land. Cost you 172,000 contracts to break into the top 10 in VIX options right now. That gets you to the October 50s. And then number 9, we've got 183,000 of the NOV 80s. Number 8, by the way, 8-2 calls over puts out there again this week. Number 8, our first of 2 puts, 193,000 of the October 20 puts. I got a feeling we're not going to hit those. Just call me crazy. But hey, if we did hit those, it would be interesting, certainly. I wouldn't be the angriest camper if we hit the 20 strike. Number 7, we've got 203,000 of the March 75s. Number 6, 206,000 of the October 75s. Those have been hanging out for quite some time. Number 5, 210,000 of the OC 60s. Number 4, our second and final put in the top 10, 217,000 of the October 25 puts. Numero tray here. We've got 238,000 of the NOV 70s, number 2, 267,000 of the NOV 60s. And rounding out the top spot in VIX options this week, nearly 300K. That's pretty beefy. 290,000 of the NOV 50 calls. Interesting. Remember we talked about those a while ago. They did those with futures. Another interesting way to kind of play on some upside. as opposed to the legion of ratios we're seeing up there. Speaking of ratios, that's pretty much what's dominating the tape again today, listeners. Looking at the numbers out there today, it's at 801,000 contracts on the tape already. It's been a while since we've seen VIX this aggressive this early in the day. You had to go pretty much to yesterday. And even yesterday, the paper was 924,000. So we're already within spitting distance of yesterday's papers. It seems like we're going to exceed yesterday right now. The big dog today, NOV 80s, 152,000 of these bad boys have gone up today, followed by 76,000 of, I said NOV, I meant Feb, the Feb 80s, followed by number 2, 76,000 of the NOV 80s, number 3, 70,000 exactly of the April pars. We're back to this one. Those are all crushing the bid. So maybe someone's getting the heck out of Dodge on the crazy upside. We shall see. Number 4, we have 40,000 of the NOV 40s, and rounding out the top 5 on a very active day today, 38,000 of the Feb 40s. Again, the big paper trade today looks like a size roll, Mr. Rocklops. I'm curious if you had a chance to check this one out. Pretty much all those all the Feb 80s went up in one print. 151,356 of the Feb 80 calls going up for 79 cents. But this was part of a spread, listeners. Looks like paper is rolling one of those ratios, and looks like maybe doing it with some house money here. It was the Feb 4080 vertical went up 37,839 times by 151,000 times versus the NOV 4080. The NOV 40s went up about 19, almost 20,000 times, and the NOV 80s went up 77,000 times. So, Mr. Rock Lobster, it's the old adage on the network, when you see a heck of a lot more size on the second leg, usually means they're sitting on some house money. Is that your thought as well here on this NOV 4080, Feb 4080 monstrosity that went up today, sir?
It's a small trade. I would, again, just I have to look back at those Feb 40 calls. I mean, where would they have to buy them to make that trade work? And how long ago did they buy them? So it's possible. I'm just trying to figure out when those options actually, let me see here. I'm just looking really fast. And the 40s, let's see here, that kind of volume. See if they did well in the last month. I mean, those calls were as low as $2. Let's see, 40,000 trading today, 15,000. So they were purchased quite a while ago. They must have been. So, of course, they were adding. So they must have scooped them by maybe when VIX was back down to around 20 about a month ago or 6 weeks ago. So if they did that for $1 and sold them for $3, yeah, I could see how they could be working the house money roll. And as we know, that when you buy those 80 calls, it's not like they just go to zero tomorrow. They're the options that don't decay. So, any pop and vol from here, that trade will pay. And where's VVIX again? Like 102. So it's above 100, which, in any other time you would say VIX at a 3240 is a lot, and the market's doing crazy stuff. And right now we're down, I guess we're down 1.5%. But I'm just looking at it like, as far as that goes, I feel like it's most likely a close and a roll up. So I concur with your take on that one.
Let's keep on rolling here. A busy day, obviously, today. Yesterday, also extremely active. But we got close to 1 million, flirted with it, 924,000 contracts on the tape. Yesterday, weirdly enough, no super massive prints like we're seeing today. No over 100,000 prints. It was all pretty much similar size paper, just a lot of it. The biggest, most active contract yesterday were the OC 32 halves, 55,000 of those, followed by 52,000 for number 2 of the October 29 puts. Number 3, 50,000 of the April 75s. Number 4, 47,000 of the NOV 35s. And rounding out the top 5 yesterday, 44,000 as well of the OC 35s. It looks like the funky one we saw yesterday, Mr. Rock Lobster. And this was all new paper. Part of the reason those April 75s are up there, that strike kind of leapt out at me. We haven't seen a ton of size going up in April yet. It was a 1x4, looks like Mr. Rock Lobster, 9,400 of the April 32 halves going up for close to $5, $4.87. So pretty close to the offer there. And then selling for, again, getting aggressive, but it lines up premium wise, obviously, for $1.10, 47,000 of the April 75s. Again, so we have seen in the past people doing it the other way, obviously, selling one, buying four. So, Mr. Rock Lobster, what are your thoughts? And of course, it's a weird time if you are going to be selling one and buying four. It's a weird time to be putting that on now. But crazier things have happened. We do have people shelling nuclear reactors again in Ukraine. So who knows? We could be at 75 tomorrow, Mr. Rock Lobster.
Also this week, I could have sworn I saw 50,000 of the 150s go up in a month. I'm trying to remember what term it was, but I distinctly remembering some 150s go up. I don't think they were Nove. I think they were Jan, actually. Mark picked it up.
I know they printed last week. Would they print this week too? It was like March.
Yeah. Okay. That was. I'm sorry. My weeks are all are blending together, sadly. But people doing the 1x4s, maybe they are taking a house money roll kind of thing. And like I said earlier, it's, when is the vol going down? We need the market to stop moving around. And I guess the next Fed minutes and the next rate hike is coming around in a few weeks. So it's a weird time, I guess, to be buying more vol, looking for more of a pop in vol. But I think maybe just the house money rollers are giving it another shot.
Just realized we've been talking about vol so much vol this week. We're already come up against it here for the shows. I'm going to bang out the rest of this VIX and maybe blow through some of these VIX ETPs really quickly. Wednesday, 637,000 contracts on the tape. The big dog out there, the OCT27 puts, 44,000 of those. Tuesday, 721,000 contracts on the tape in VIX. The big dog out there, the Feb 70s, 52,000 of those. And Monday was the comparatively weakest day of the week, 396,000 contracts on the tape. The big dog, such as it was, 22,000 of the October 28 puts. Coming into the start of the show, we had our friends SPKX and Spiky up a wee bit. SPKX was at about a 33, up 1.1 points. Spiky was up nearly 2 points, 1.7 points to 37.10, kicking off the show. Both of those starting to get some paper out there, which is good to see. The OCT47s are the big open position right now in SPKX. I think the Meatball still has his one lot on those out there. And Spiky at a 24 lot of the, OCT52s. OCT52s are the big position out there in good old Spiky. SVIX, our inverse friend, was at about a 10 when we kicked off the show, down a third of a point. So again, kind of getting back into this somewhat muted response we're seeing out there from the vol products. The ADV is getting a little bit more respectable now. 1,010 contracts a day is the average out there, so a little bit more respectable. The big size position out there in SVIX right now, 2,077 of the DS11s, a strike we've been hanging out at for a while. UVIX, our levered friend, 1,465 when we kicked off the show. We had almost 4,000 contracts on the tape already in UVIX, and the ADV is hanging out about 6,400, up a whopping 35 this week. So the ADV doesn't change. It seems like all the paper in these products goes up on our show day on Friday because weekly expiration seemingly drives all the paper in these products. Mr. Rock Lobster, anything catching your eye out here this week in the rest of the week for VIX options in SPKX or Spiky or SVIX or UVIX this week, sir?
I mean, nothing in particular because I like those products mostly when they can fall apart. So without really any puts, moving around, I haven't spent a lot of time looking at them. I'm just now trying to get used to looking at VXX again after they started doing creation units again. So it seems to be moving a little bit more as of normal. So, but the only thing I would say is, something like SVIX or all the short VIX products, this is the time you want to start looking at them or getting ready to trade them because, VIX is at a relative high and those products are at a relative low. And you do want to catch the next swing down. So I tend to try to not look at them until, we've stayed in backwardation or flipped to a little flatness for a while. Because, it's like anything, you don't want to catch a falling knife buying those things. But it is getting it. Let's just say it's getting closer to a time where they could be interesting. But I'd like to see us somehow get out of this this inflationary market crushing corridor that we're in before I look at them any harder.
Indubitably, VXX, as you mentioned, hanging out at a 2160 when we kicked off the show. It is still at a 2160, so it hasn't really budged up, not even 0.75 of a point, about 0.7. Doing a little bit more paper today, 42,000 contracts. The ADV is 53,000, up a whopping 3,000 from this time last week. So I think VXX has a long way to go to reclaim itself in the hearts and minds of vol traders, but it is beginning the slow and dangerous process of doing so out there. Right now, the top position in VXX, we have 17,000 of the October expiring on the 28th, 19.5 puts out there. And if you like some single name vol, you're in luck because it's starting to come back this week, listeners. We've got earnings season popping off hot and heavy. Today was really the unofficial start to earnings season. We had all of the financials popping off today. JP Morgan, Morgan Stanley, Citi, Wells Fargo, US Bancorp, PNC. Yesterday we had Delta Airlines, Domino's, a Pizza, and Walgreens Boots Alliance. So a lot of great earnings vol to sink your teeth into. If you want to do that for yourselves, theoptionsinsider.com. Click on the Options News and Articles tab. We have all the data there for you, hotly refreshed for what's happening this week, what's coming up next week, the season, the earnings trades we have going up, all sorts of fun stuff. If you are even remotely interested in trading during earnings season, you need to check it out. It's literally the only source of this stuff, unless you go commission a study at Goldman, let's say. And they're going to charge you an arm and a leg for it. We do it for free, and I argue we probably do a better job. So check it out over there, theoptioninsider.com. As we keep on rolling, listeners, it is that time. It is time to get difficult. It is time to get dangerous. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to predict what the vol gods hold in store. And both VIX and SPKEX kind of hanging out pretty much for the duration of the show. SPKEX a little bit shy of 32 right now, 31.92. VIX at a 32.38. So they're both almost unched from where they were at the start of the show. That means the meatball is at least within a point for his palindromic nonsense that he guessed last week of 33.33. I was at a 30.65, so we did not give up the ghost enough to make my number. Didn't really get elevated enough to hit the meatballs number. No winners there. You know, Option God at about 32.40 almost in VIX. I might be charitable. I might say you're there. Yeah, I just ticked. Okay, you know what? 41. Okay, you're within a tenth of a point, Option God. Oh, no, I'm sorry. You're 30.5. I thought you were 32.5. Oh, I take it back. I'm sorry. I didn't mean to tease you. No prize for you. So everyone else had, looks like a 29 handle, 30 handle. You were the closest in the listener guesses, Options God. Try again next week. Let's go around the horn now. Mr. Matt, no winners for this week. That means you get two dubious honors. First, what is your prognostication for vol this time next week? And also, what is your guess for what our audience is voting for in our question of the week this week, which we're asking them quite simply if they had to buy a 10% out of the money call on one of the four underlyings here. It expires at the end of the year. Which one would they choose? We gave them VIX, Bitcoin, crude oil, or SPKX. Mr. Matt, what is your vol prediction, and what do you think our audience is voting for in our poll, sir?
In terms of vol prediction, I think it kind of feels like SPKEX, VIX is kind of comfortable in this area where it is right now. So I don't think there's going to be much movement on a week-to-week basis. So I'm going to call 31.5 on SPKEX from a week from today. In terms of the audience participation question, VIX, Bitcoin, crude, or SPKX, 10%, a buyer of a 10% out of the money call. I would suspect be buyers at 10% out of the money, VIX calls or SPKEX calls. That's where I think most of your audience is gonna land.
All right, Mr. Rocklobster, same question for you, sir. What is your vol prognostication for next week, and where do you think our audience is coming down? A VIX/spikes, Bitcoin, crude oil, or SPX, sir?
My vol prognostication is, and we don't have a lot of really headline news, so I'm going to guess $29.99. What you used to be able to get a car painted for by Earl Shive in LA in like 1972. No, was it $49.99? Anyway, but that's not my VIX number. $29.99 is the.
Go 49. Why not? Let's have fun.
that could be fun. And now as far as, I think people are picking, 10% out of the money SPY. I mean, heck, yesterday in the morning, you'd be halfway there in a day. So I think the 10% out of the money call is probably the, let's just call it the fun play.
The fun play indeed. Let's get out of here with my prognostication. Listeners, I was at a 30.65 last week. I don't hate north of 30, but not a ton. So I'm going to bump it up a little bit. I'm going to say 30.85. How about that? So there's Matt at a 31.5. I'm at 30.85. And the Rock Lobster going daring, $29.99. As we play our outro music, I will play off our question of the week as well. There we go. And as for our question of the week this week, listeners, you folks right now, 50% exactly choosing the SPX. You're looking for a 10% rebound in the S&P 500, 32.4% choosing crude oil, and then pretty much a tie, 8.8% each for Bitcoin and volatility. Get in there. You've got about 2 hours left. Probably won't have a chance on the podcast while you live folks can make your voices heard. As we go around the horn, Mr. Matt, if folks want to reach out and learn more about all things spikes, where should they go? What should they do?
All things spikes, go to MIAXoptions.com/spikes. All types of materials for you there. Convexity shares, ETFs, the SPKX and SPKY, that's convexityshares.com.
There you go. And Mr. Rock Lobster, sir, if folks want to reach out to you with vol questions, where should they go? What should they do?
Oh, good. Call 888-TRADE-01. Ask Ted or other Andrew will pick up the phone and say, hey, I want to learn some of this vol trading stuff. And you will get a 10% discount just for listening to our show on said network. So anyway, that's the deal.
That is the deal. Check them out, optionpit.com. The deal for all of you on-demand folks is that is the conclusion of our broadcast week. Thank you for joining us here on the network this week. If you missed anything, of course, it's available on all of your leading podcast providers. If you don't want your broadcast week to end here, you want to get access to the 2 shows coming at you today, Double Pro Day, as well as, of course, access to everything we've already done in the exclusive Pro podcast feed, live access to this show and everything else we do throughout the week. And, of course, get your name in the hat for our awesome Pro Trader Crate giveaways. There's only one place to go, theoptionsinsider.com/pro. We'll look forward to seeing all you pro folks in a little bit for Options Oddities. For the rest of you, have a great weekend. We'll see you back here next week. Another Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores.
select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.